and gentlemen, welcome to this video today. And I just had this idea today that given that on the internet you can't really find any good professional demonstration of how FX scalping actually works if it's done professionally, I should maybe do this video and show how I scalp. So let me explain. I concentrate, as you know, on exposing market manipulation. So I've shown a lot on the so-called market causality. I've demonstrated the manipulation, how this can be traded also via manual position trades, etc., etc. I've also shown like automated trading, trading bots, how that works. And now, to go for completeness, I should probably demonstrate to you how you can manually scalp Forex. Okay, so first trade is coming right here. Going for a short in Australian dollar. Don't worry, I'll explain everything in a minute. Okay. Now we'll explain to you exactly what I'm doing here. Just give me some time to place those trades. Oh, that's Aussie Kiwi. That one I missed. Okay, don't want to look at that one I missed. Okay, so let me say straight away that FX scalping is a very, very demanding activity. Okay, that's a reason why most people completely fail at it. And so do not ever think, that, you just sit there and you enter buy and sell orders and you will make money that way. Forget about that idea. Most things you find on the internet on FX scalping, they are a complete myth. So I will call this video, myth and reality. I think that would make sense. So it's definitely not free money. It's not easy in that sense. Okay, it's a very demanding activity because what you will need to do, a high number of decisions in a very short period of time. You need to have, a system and style in place where you have complete confidence in. You need to always use stops, okay, when you scalp FX. If you don't do that, then, one single trade can completely mess you up, okay? And that's where most people fail. It's a discipline aspect. You need to have discipline on all levels. Discipline to place a stop and to not move it and to get yourself kicked out if the trade goes against you. Discipline to not over leverage on single trades, okay, but to come up with reasonable leverage whereby, a single loss doesn't wipe you out or hurt you. Discipline to, let also winners run and to not close them too quickly, okay, even though it can come back and your profits can be wiped out again. Discipline to accept whenever you have a bad day and things don't work and to say, okay, this is the amount of money I'm willing to lose on that day, and then I just cut the day. Okay, these are the main reasons why people fail at FX scalping, apart from the other complexities. Like, you know, most people, they do not have any good approach or system or style, you know, which is time tested, you know, because the reality is it takes you a few years to develop something that works for you. And you know, that's the reason why FX scalping is so difficult for most people. And so what I try to do is I'm trying to you know, give you a bit of a feeling for how it's done when you want to do it professionally and you're serious about it. Okay, so let me explain a few things. First of all, this FX scalping approach I'm showing you is based on a little system I've developed, but it's very discretionary, okay? So if it wouldn't be discretionary, then, you know, I would automate it and add it to my bot portfolio, okay? So, and it's this approach here is not based on, like, you know, the market causality as such, you know, as I've shown it. Otherwise, I would take on position trades and be willing to hold them over, you know, several days if necessary. But that being said, of course, since I know about the market causality, I come in to the scalping session with some ideas and, you know, some opinions on markets. For example, if I know that, you know, the long is an Australian dollar, I know that I don't want to buy any Aussie pair that day, but I rather, you know, I'm willing to short Aussie pairs, you know, to give you one example. However, the trade implementation has to follow certain rules. So every trade I place in this FX scalping session has to be placed with the stop. If the stop is touched, you know, then I take my loss. Okay, I will never break this rule in the scalping session, because if not, you know, the trade can go against you, and you have a proportionally high loss. Even if you have a few winners, you know, your wins get wiped out in the single trade which went out of control. So whenever you see someone saying something, oh, I'm scalping without a stop, or use a rubber without a stop, they don't really know what they're doing. They are not aware of the risks they're taking, okay? And of course it takes sometimes a lot of strength to, you know, have a few losers in a row, you know, and to still have an unbiased view and to select trades correctly based on your criteria. That's where people fail. People get emotional, yeah, they want to make back their losses, and then they fall into a game of, you know, completely losing control. So what I want to do here is I want to show you how basically it's done professionally, and you know, I will try to comment, you know, along the way, if you don't mind. So, yes, this discretionary approach implies that my trade selection, the setup selection, has discretion, the levels for the stop and target have discretion, the choice of leverage has discretion, and there's also discretion when to stop the session, which pairs to select, you know. So this is all done in the brain of the human trader, like me in this case here. And in order to basically beat, you know, the algorithms, you need to really be playing your A game, yes? So after such a session of, you know, trading for 6, 7, 8 hours or more or less, you will be completely exhausted, because you're doing so many decisions in a very short period of time, and you cannot afford to make any mistakes. If you do mistakes, you know, you can quickly lose the session, you know, and go home with a loss. Of course, you never know whether, you know, like, you know, that particular session will be a winning session or losing session. That's not in your control. What you can control is, like, what you do in this particular case. Okay, let's see. So Australian dollar is already in profit. Let's let it run a bit. I will walk you through how I approach a scalping session, and I will even explain, you know, my particular little system and indicators and patterns and candlestick patterns, because, you know, it's not that I'm waiting for, you know, indicator signals. No, I'm, you know, deciding on whether I place a trade and in which way based on the chart pattern. You know, I zoom it out. I will show you in a second how I do that. The candlestick pattern, the momentum, correlation to other markets, whether news are coming, and the causality bias I may have in other markets, whether, you know, risk return is acceptable. And then, you know, of course, indicators play a role in that decision process. Yeah, so the range, as you can see here, I explained that all in a second, the momentum, etc. But it's not, you know, that there are secret indicators and once you use them, it works. Okay, there are many, many ways that lead to Rome. There are many good systems out there. You know, you need to develop your own. This is a system I developed for me, so it works for me. It may not work for you. You need to find your own, and you need to have confidence in your own. You need to invest the time to have full confidence in that it works over a big sample of trades. So I'm in profit, but you know, this is just the beginning. And yes, as I said before, you know, you need to have slept well, you know, wake up early, maybe you were jogging or made some sports, you ate well, maybe you meditated, you know, you did your breathing exercise, so you're really, you know, in the zone, you're really focused, you can concentrate, you know, so that you minimize any human errors. That's essential. If you don't feel well, you know, then look, just skip the session, because most likely you will lose. You know, this is very sensitive. If you do a little mistake, there's a high likelihood that, you know, you will end up in a losing session and so on. Okay, enough talking. Let me demonstrate. So why did I place this short trade in Australian dollar? Let me show you. So I use this indicator here for understanding the range. You know, I have certain settings and certain color patterns which show it to me quickly. You can use anything, a Bollinger Band. You know, there are loads of free indicators like this on the internet. I use this commercial indicator, but there are equivalents on the internet for free. You know, stochastic, many, and I changed it a bit. So because look, I was looking for the following. So I zoom out and I show you what's going on. So my bias on Australian dollar was already bearish, because as you maybe saw in the other video, there were longies in the market. So what happened is, as predicted, the price went down overnight, then it went all the way up again, and then now it's again at the position where the longies are. So my general bias was bearish. So after this long uptrend in the last hours, you know, and this pin here, I decided, okay, after this pin up here, you know, there's a high likelihood that, you know, you see this pin cleaned this plateau and the stops which have been here. It's high likelihood it normalizes back down into the range. Now my own target, you see, is just below this low, because their longies tend to place a stop. So you can see already that I'm always thinking in terms of market manipulation, because that's what the algorithms do. Okay, even if I trade manually and discretionary, and you know, use like statistical tools to place manual trades, even then I think, okay, where are the stops? How does the money think? How does the smart money think? So, you know, basically it's a bit like a mission completed scenario. With this pin, this plateau has been cleaned, you know, so after this big uptrend, there's a good likelihood it normalizes back into the range. And what I do is I screen all the charts, you know, and if there's something I don't like, I skip the chart for now. So this dollar yen, I have some other long-term positions in there, or, you know, so I have a general bias for this market. That's the reason why I skip, you know, selling those pullbacks. Let's see, so this is a reverse gray pattern. Let me change the color of this. It could reach this price down here. So, you know, this could be a pullback entry down. But in general, I'm not too bearish on dollar yen. And I would need this momentum indicator to turn down, okay, and cross the line to the downside. If you know, I would consider an entry short. So that's not enough, I skip it. Let's look at dollar cut. I made some nice trades in dollar cut today. I did this long here. Yeah, this indicator shows me, so it's quite whipsawy. Yeah, you can see, so this is already a reverse gray pattern. This high has been taken once more. The lowest plateaus have been taken with this move. It's a bit of a mini house clean. So very low bias, no. And this is confirmed also by the momentum indicator. I don't want to place any trade there right now. I really don't. So I quickly know. This is more interesting, right? This is Euro Aussie. So we had a massive uptrend, a massive downtrend, almost 100% retracement. Ah, not really. So there's another low. And now we have the strong bars up taking out this high. So a complex setup would be a range trade short back into the range, but these bars look too strong for now, so I'm not willing to do that right now. Euro yen, let's look at euro yen. Pretty flat today, consolidating. Yeah, so we're changing into a bearish mode. This could be a bearish entry. Yeah. Albeit it's quite low bias. So for example, if I would do the trade, I wouldn't risk much in it. So this shows that there may be a trend change to downside, so it may change into a downtrend, which if once you zoom out would kind of make sense. Kind of like that. Only thing I don't like is that, you know, the overall trend is not really in the bearish mode yet. So no, I skipped that. That's not good enough. Cut yen. Testing the lows, obviously correlated to dollar yen to some degree. I don't like this. No, nothing to do for me there. I know it already. Looks dodgy. Aussie Kiwi. I bought this one, yeah, at the high. So tested 1, 2, 3, 4, 5 times the high. So it's like fake resistance. You may know that from my causality videos. So there's a chance it actually breaks it, takes out the upper stops. I put the stop closer though. It's tradable, so it's okay. Not super confident, but okay. Right, so this is Aussie cut. No, nothing to do there at all. Skip that one. Aussie yen. Very ripsoy, very rangy. Going into a downtrend after this pin up. That looks rather bearish. So could break those lows here. No. But again, it's an Aussie yen pair. So if I short Aussie already, this is just adding to my Aussie exposure, you understand? So I'm kind of already in that kind of scenario. So I'm not keen on now increasing the exposure. This is Euro Kiwi. It had a long, slow downtrend today after this strong uptrend overnight. Now taking out the upper highs. Yeah, the only way would have been to buy the yellow line. Can't do that now. Kiwi yen, I did some nice trades in there today. Did some nice pullback up trades. That was beautiful. Now to the lows. Entering into some kind of downtrend, really. Yeah, so this looks bearish indeed. But, you know, if I want to enter short, it needs to be a pullback to here, for example. So sometimes I leave an alert there. Kiwi dollar, same story, nothing to do there right now. We'll probably make a pullback up. You could, you know, look, you can do some low risk trades. Low probability trades with a good risk return. You know, for example, sometimes you can scalp, like this would be scalping back into the range. So it will probably turn into a downtrend eventually, but before it does so, it may just do a breather up back into the range, like here. And you can place a stop really close here. And, you know, most likely you get stopped out. If not, you get a good risk return, for example. You can do those kind of trades now and then. In that particular case, I kind of like. The only problem is it's difficult to predict exactly how much far into the range it goes. You see this like risk return of around 1, maybe a little higher. No, not keen on this. Kiwi cut. You need the discipline to, you know, stay away if you know, don't like something. It is what it is, even though it will most likely work. You know, as long as you have a good amount of trades in a session, that's all that matters. This is Kiwi cut coming down now. I mean, if that would do a nice pullback up, would be nice long, but that's not enough for trade. So yeah, I have my Aussie, I have my Aussie Kiwi. So yeah, if you trade like 14 markets on a 5-minute chart, you will get a good amount of setups, you know, on a regular basis every 10, 15, 20 minutes. Of course, it's not normally distributed, so sometimes you may get like a whole number of trades, and then you may have an hour where you can't do anything really. So that is the dynamic of the game. You know, as a human trader, if you want to scalp, you need to adjust yourself to these dynamics. You know, it's not like you can say, oh, I get a trade every 10 minutes. No, it doesn't work that way. You have to be very dynamic. You have to adjust to, you know, the rhythm of the game, to, you know, what the algos do. And of course today, so today is the 20th of March 2019, it's exactly 4 o'clock local time, and we have later at 8 the US interest rates Federal Reserve statement. So I know already that around 8, so around 6 hours before, the market will get slow and rangy. So that means in 2 hours I will stop trading altogether. So I have like 2 hours left to do some manual scalping, and then I will close my positions and you know, let the rates pass, which will probably do some kind of house cleaning, euro dollar, which will affect all markets. So these kind of things, you know, that's basic stuff you need to have on your to-do list, you know. So let me explain again. So you come to your trading station, you set up everything as you need it. You check the news, you know, when are the next news coming, big US news, at which time. You need to be aware how many hours do you have left to that, so you don't get caught up in some crazy moves. You see, what is the market like? Is it very liquid and volatile that day or not? You know, is it a slow Monday or slow Friday, or what's the general story? You know, what kind of moves did the markets do overnight? You know, do the big pairs dominate the markets at the moment, like euro dollar, pound dollar? What's the situation right now? As you know, we have the Brexit situation going on in pound, so that affects all pound pairs. US dollar, of course, is affected by, you know, the big US fundamental news, or by, you know, events involving Trump, by things such as, you know, trade deals, trade wars, etc. So that's basic stuff you need to be aware of. And then of course, I look then at the market causality, as you know. I look at, okay, where are stop accumulations? Where's the dumb money placed? What's the thinking of the dumb money? What's the thinking of the smart money? You know, which market at the moment is like, you know, the kind of leader. You know, for example, I see here there are shorties in euro dollar, and you know that therefore the euro dollar went up over weeks in an uptrend, now taking upper stops. So for me that's essential. But you know, then you know it comes down to the implementation when you manually scalp. So for example, I have my automated strategies running. I don't need to do anything on there. I have long-term positions on the market causality running, but so what I'm doing here in front of you is like the manual scalping where I use statistical tools, which is highly discretionary, yeah? However, once you found something that works for you, you know, it can become second nature, you know, it's still very analytical, you know, it's not freestyle trading at all. You know, there are certain factors. Of course, what comes into play as well is screen time. If you have watched those charts and markets for 5 years, you will have a general feeling for, okay, what's going on in that market, you know? So do we have like, you know, a scenario where there's a gray pattern, a reversal of a price move? Is there a scenario where the market goes flat and does head fakes and breaks out? Is there a scenario where there's an ongoing trend and there are pullbacks and then trend resumptions? You know, these are all things which come to play when you discretionary select markets, select trades, manage trades, value trades. Because if you put a certain amount of leverage on a trade, this is kind of, you know, giving a grade to the trade that expresses your confidence. If I'm more confident about a trade setup because everything fits, the chart pattern, the candlestick patterns, the indicators, the general situation, then of course I put in more leverage, yeah? However, whatever you do, whatever kind of tools you use, most importantly, you have to have risk management in place. Above all, you have to be a risk manager as a manual scalper. Okay? If anyone tells you something else, they don't have a clue what they're talking about. Okay? If you see those internet people, yeah, they talk about, I'm doing those trades, I don't place a stop, it's BS. Okay, these guys need only one single trade which blows out their account or which messes up their trade performance. If you scalp on a 5-minute chart and you look at 14 pairs, you need to use stops. Okay, and if there's a setup and the level where you want to place a stop is too far away as compared to where your target is, well, then skip the trade. If you have a negative risk return, and you're not super confident about the trade, just skip it. It doesn't make sense to do it. Of course, in the short term, you won't have many situations where you get a great risk reward. Yeah, that's no coincidence. That's the way the algos, manipulate the markets, because otherwise it would be easy to do short-term trading. So, if you find during the day you have a lot of setups like here, and out of the 15 setups you find like 4 very good risk reward ratio trades, take them. But for example, now, look, I don't expect big moves, so there's not much time left, not much range left. So at the end of the day, in this particular situation where we have the interest rates and the slow rangy period before, it would be a bit foolish to count on big moves to go for 20-30 pip moves. The likelihood is low that this will happen. So I already did my scalping today for a few hours. I'm just trying to document a bit of the remaining hours now, and to really explain to you a bit like how this can work. And you also have to understand, all those Instagram forex signals people, apart from the fact that 80% of this is complete scam, yeah, think about it. It's not the most difficult part of the manual scalping, the trade signals, you can design something which gives you a decent amount of good signals. There are good indicators and systems out there for that. It's about how do you actually, do the trade implementation. Where's your stop? How much do you risk on that trade? How do you manage the trade? Do you maybe close it early for some reasons? Do you try to put in a trailing stop to, catch a long move? What's your general exposure? These are the very deciding things. Of course, it's assuming that you have something in place where you have evidence that it works, okay? And that's why this is assumed. So that's pre-work you have to do, okay? If you if you have not even put in the work to create a system that works for you and gives you confidence and allows you to, scalp in a feasible manner, then you don't even have the basics. So then you will completely lose control, because you may see setups where there are none, or you may take trades you wouldn't normally do. And then there's those particular traps. For example, let's say you worked for 5 hours and it was just a bad session and you lost more than you were winning. Well, you need to have the discipline to say, okay, it was a bad day. I close the session and I go home. That's what a professional does. And a rookie trader does the opposite. He says, you know what, I stay now, I put on a big trade. If I'm lucky, I make back all my losses and I make a profit. And you know what? They may do it one day, it may even work, and they feel good. And the next time they do it and they lose everything, or a big amount of their account. These are like particular traps human traders tend to fall into, because of their emotions, their ego. I tell you what, you will not find a single professional trader, okay, who is not humble. Whenever you meet someone who claims they're trading and they're super arrogant and they are, overconfident, this, it's a recipe for disaster. Because every professional trader knows that they can be wrong on any trade, okay? They know there will be bad days, bad phases, drawdowns, and they do the opposite of gambling, okay? Unprofessional traders, wannabe scammers, Instagram traders, all these kind of people, they, if they trade at all, rather than faking it, they are basically gambling. They hope that they can place a few good trades and it kind of works. And they don't have anything which consistently works over a long time period, over different market conditions. It's just like pure illusion, and they make money often with introducing to brokers or getting a commission cut, those kind of stupid things. This has nothing to do with professional trading. Already for 30 minutes now. Wow. I hope that I have enough cage for that. I actually only wanted to do a teaser, and then on another day I wanted to record a whole complete scalping session. But anyways, you know, I will try to do it as long as I can now until my cam shuts me off here. And of course, you know, another topic, I mean, you need to have, you know, of course, a professional setup. That means a true ECN broker. Yeah, so an undisturbed price feed. You need to have a strong computer, a strong internet connection. All your tools need to be in place. Yeah, I mean, you need to have a good commission deal, a swap deal. I mean, if you try to, you know, scalp with a retail broker with such a spread, you know, where the spread always kills you no matter what you do, I mean, you will lose. You know, I mean, there's no question about it. You know, you shouldn't even think about scalping a 5-minute chart on all these pairs, you know, if you have not a true ECN DMA in place. As simple as that. You know, that's the only way. That's a basis, you know. And then, as you know, experienced traders say trading can become boring. Well, to the point where you're basically always doing the same thing. So if you have a professional setup, a professional mindset in place, yeah, I mean, it will be repetitive because you basically know what you're looking for and what you're not looking for, you know, and the more experience you have, you will actually, you know, really become more and more selective, you know, in the process. It's not that, you know, you necessarily do more trades with more experience. Quite the opposite. You concentrate on good setups where you know you have a good chance, where the probability is on your side and not against you. You know, you concentrate on those situations where you can actually score, because that's then where the fun comes from, that you are in control, you're not gambling, and you are having an upside. And on many days you get this upside and you're able to monetize it. Okay, and then on the bad days you don't mess everything up, but you basically, you know, just take your loss, and you know, you keep your mindset. And you guess what? You know, there's a spiritual component to that, because it's about taking and giving. You know, when you're losing, you're basically giving back to the market. You know, I recommend this book. I think it's by Adam Grant, about givers and takers and matchers. You know, often you can put people in these kind of categories. And trading requires you to balance. You know, you can't expect every trade to win, every day to be a winning day. It doesn't work that way. If you do, and if you try to force it, it will fire back and make things worse and increase your losses. Okay? You need to be, you know, you need to have balls of steel, but not in the sense of, you know, placing huge risks, in the sense of really sticking to your strategy and to your risk management. Okay? It's hard, it's difficult. You know, you need to have your emotions under control. If you are emotional and you're not disciplined, you will just follow greed and fear, and it will be a disaster. It will be a horrible experience for you. And if you have not invested the hours and not made your homework, and you have something which actually doesn't work, and you try to be disciplined in the implementation, but over a long period of days you see it's actually losing overall, it's the same thing, you know. None of the two is enough. It's not enough to have a good mindset and good psychology, and it's not enough to have a good system or approach or strategy. You need to have both. As a trader, you need to be offensive as well as defensive. You know, you need to be able to pull the trigger when you see something and you're confident, but you need to be able to also say, you know what, I'm not sure about this, and now play defensively. It's, you know, people tend to be strong on either of those two sides. Rarely you have someone where everything is in balance. You know, people who go for the kill and to also, you know, retreat if they have to. And this is exactly what's required. You have to understand, if you're trading in the short term, and it's not only valid for FX, but for anything, you're competing not only with the brightest minds on this planet, but also with the best algorithms out there. You know, some of the most intelligent people have programmed those algorithms. They're highly complex. They use highly complex mathematics. And if you think you can compete with them, you're better prepared, you're better playing your A game, you better did your homework, you better are in full emotional control. You know, you're in mental and emotional control, you know what you're doing, you do it with, you know, everything aligned, your gut feeling aligned with your analytical knowledge, with different factors at once, yeah, your visual information combined with your statistical knowledge, combined with, you know, all areas of your perception, yeah, cognition, emotion. You have to have that in place. Otherwise, the chances that you not only will not make any money, but lose, you know, that's another thing. You know, people don't realize that, you know, in trading, you will actually, if you don't do the right thing, you will lose. You know, in other areas of business, you may sometimes miss out a profit, but not directly lose money. In trading, you can directly lose money. And if you do not know what you're doing, if you don't follow the rules, if you do not respect the game, if you do not have respect for the game, then you are up for disaster. Okay? And the reason why most people lose in the markets is exactly that. Over 90% lose, it's proven again and again. It includes all kinds of traders. And the ones who are professional, who do not necessarily work at institutions, but who take the game seriously and, you know, who worked on themselves, who put in the hours, who made their mistakes in the past, you know, who had to learn the hard way how they have to approach things, they are the ones who will be surviving. And then, of course, the upside will come. But you can't directly control the upside. You can directly control the downside. If you read Market Wizards, you will see that those 14 traders, all of them have completely different approaches to the market. One is a quantitative trader, another one is a discretionary trader, another one is an automated trader. But the one thing where they all have one thing in common is the risk management. They do not risk too much risk per trade in terms of percentages. Even the aggressive ones, they have certain rules in place. So whenever somebody tries to convince you that you have to risk more, like, you know, huge amount percentages in the risk in a trade, they don't know what they're talking about. And they have a concise plan and they stick to it. If a trade doesn't work, if a position doesn't work, if the market is doing funny things, they discipline, they take the loss and they leave, you know. They come back the next day, they wait for the situation where they can score. They've designed everything in a way that, you know, they're able to survive and, you know, able to, you know, bring money home on the good days. And that's all it is about, nothing else. You know, like FX trading is about balancing these things. And just because you're sitting there in front of screens and clicking a button doesn't mean it's easy. You know, a monkey can click a button, a monkey can enter trades. But, you know, only very sophisticated and, you know, trained and, you know, experienced traders will understand the importance of all the things I'm trying to explain here. You know, to come with a plan, implement the plan, and to leave. To not break the rules, to not gamble, you know. And of course, you know, not, you know, there's also another extreme, people who cannot pull the trigger, they sit there 10 hours, they don't place any trade. I mean, you can't do that neither in trading, you know. You need to have, like, done your work, that you know there are situations where you can score. And you're willing to wait for them. And sometimes waiting, you know, can be difficult. You need to have something in place where it all kind of works, okay? Where there's maybe stuff you work on when you see that the market is not giving you any opportunities for a few hours, you know, and you do not waste the time by sitting and looking at the price going up and down, but you actually work on stuff during that time while having an eye on things. You know, and then there's situations where you need to be on top of things and really, like, you know, place your trades and, you know, take advantage of the setups which are occurring. And you need to have the confidence, okay, what I'm doing now, this risk I'm taking is worth it, because, you know, over a certain sample, the profit will appear then. And, you know, the most common mistakes in that game are very, very primitive, you know. People not wanting to, you know, accept that the scalping trade didn't work, and rather than getting stopped out, you know, they just, you know, move the stop away, you know, and then they increase their position, make it worse, or they try to just do another trade and hope that it will balance the loss, even though there's no real setup. You know, the human perception can quickly change. You know, you have to be careful, like especially when it's about discretionary trading, and you have to use discretion to find setups. You know, do not convince yourself just because you're in a losing trade that, oh, now I need to trade this pullback. And that stuff is hard, you know. It's, you know, constantly telling yourself, look, this is what I should do, this is what I shouldn't do. And whenever there's any doubt in your mind and you feel something is not right or not good, stay away. As I demonstrated to you now with the trade selection, I went through these pairs and I almost, you know, wanted to play some trades, and there was something I didn't like, and I skipped the trade. You remember? For example, here you see I didn't want to short Aussie yen. Look, it did a pullback. So this is the stuff which differentiates losers from winners in the end. Believe me. You know, now if I wanted to enter, I could still enter the better price. You know, so good for me. And Kiwi yen, well, I could have. That was that one over. I could have placed the quick reversal. It would have worked. You see, I could have placed a tight stop, and this trade would have worked. So yeah, I missed that one. Yeah, okay. You have to be. You cannot afford to fear to miss out. That's part of the game. You know, if I would have been so confident, I would have just done the trade. I skipped it, so fair enough. You know, that was a reversal trade with a tight stop, which doesn't have a great win-loss ratio over time, but the risk return was reasonable. But you know, I decided to not do it. Fair enough. Other opportunities will come. Okay, so to conclude, let me say, do not try to be Superman. You know, if you concentrate for 7-8 hours on markets like this, you make those decisions, you manage your trades, you know, you looked at the news, you analyzed what's going on fundamentally, you know, you tried the best you could. At some point your concentration will go, you know, so even if there is a session where there's more movement until 9-10 at night, you know, but if you feel that, you know, you can't give 100%, look, don't try to be a hero, you know. Every human is limited. You have only a limited amount of concentration per day. And if you can't play your A game and you don't insist on scalping 5-minute charts on 14 markets, you know. I mean, if you can't play your A game, no matter whether you had a good day or a bad day, just say, you know what, I'm done for the day. Maybe I work on long-term stuff. I work on an automated strategy, or you know, I write some analysis or commentary on markets on a 4-hour chart, or I need to repair my computer and make it more efficient, or I'm looking for, you know, a new thing that came out. I see whether I can improve anything on the strategy. Whatever it is, there's enough stuff you can work on. There's always stuff you can work on. But you know, do not push it too far. And you know what? If there are strategies, you know, which can run 24/7, but these are preferably to be automated. You know, a computer can trade 24/7, but then of course the computer can't, you know, do those discretionary things. Like, look, this is in the best case you can do all three, like I do. You know, you can have your automated stuff, you can have your discretionary stuff, your long-term stuff, and you know, if you see there are setups which can be automated, you know, where not too much discretion is required, well, then automate them, you know. Get them automated, test them. If it really works, as I've shown an example on the EA video, well, you know, go for it, you know. If you feel that a certain setup is better implemented by an expert advisor, an EA, a trading robot, well, then let the robot do the work. But of course, there will be things they can do better, but other things you as a human could do better. Yeah, and as I've shown here, look, there are so many discretionary aspects in that approach, where, for example, you know, have to select markets, select you know, like entry points, stop levels, etc. You know, the human can be better in doing these kind of things. You know, your brain is able to, you know, adjust to, you know, what news are coming out, what's the time, what are other markets doing, you know. This is something a computer cannot easily do. The computer will just follow the rules you give it. You know, you give it certain rules. If the conditions are fulfilled, it does what it's supposed to do. Okay, I think 45 minutes, that's enough of monologue. I didn't expect that this would be so long. It gives you a bit of an impression how FX scalping could be done. I hope you enjoyed it. I will do in the future also videos on more generic topics such as risk management and trading psychology, because apparently there's demand for that. So far I've concentrated on the complex stuff like market structure, market manipulation on the micro and macro level, how stop hunting works. This is advanced stuff, you know, but apparently I should also cover more fundamental topics such as, you know, risk management, trading psychology, and all these kind of things. So I may also produce videos about that. And yeah, so basically I'm covering everything here. Yeah, so manual trading, automated trading, market causality and market structure with the manipulation. And then in the future we'll also cover, you know, more generic topics which are important and basic, you know, such as risk management, mindset, maybe also what's your setup, you know, how to develop an approach, etc. And maybe also, you know, other more generic topics. I want to make things a bit more engaging, yeah, not too technical. So far my videos are a bit more technical. So that's the reason why I have this split screen, and you know, in the future I will make it a bit more personal, if you like, because I feel that's what people want. You know, they want a bit of a personal touch to it, so that's the way to go. Okay, ladies and gentlemen, all the best, stay safe, goodbye.